Welcome to our exploration of sustainable and ethical investing, a movement that's rapidly transforming the world of finance. In recent years, more investors are seeking ways to align their portfolios with their values, focusing on companies that prioritize environmental, social, and governance factors. This approach not only aims for financial returns but also supports positive change in the world. As we journey through this topic, we'll uncover what sustainable investing means, why it's gaining momentum, and how it impacts both investors and society. Let's begin by understanding the core concepts behind this powerful trend. Sustainable investing, sometimes called socially responsible investing, involves choosing investments based on their impact on the environment and society. Investors look beyond traditional financial metrics, considering how companies address issues like climate change, human rights, and corporate transparency. This approach encourages businesses to adopt responsible practices, ultimately benefiting both the planet and their bottom line. By integrating these considerations, sustainable investing offers a holistic view of risk and opportunity, appealing to a growing number of individuals and institutions who want their money to make a difference. Key component of sustainable investing is the ESG framework, which stands for environmental, social, and governance. Environmental factors assess a company's impact on the planet, such as carbon emissions and resource use. Social factors examine how a company treats its employees, customers, and communities. Governance looks at leadership, ethics, and transparency. By evaluating these areas, investors can identify companies that are not only profitable but also responsible and forward-thinking. ESG has become a standard for measuring sustainability in the investment world. ESG framework matters because it helps investors understand the broader impact of their investments. Companies with strong ESG practices are often better positioned to manage risks, adapt to changing regulations, and attract loyal customers. Studies have shown that ESG-focused companies can outperform their peers over the long term, making them attractive choices for investors who care about both returns and responsibility. As awareness grows, ESG is becoming a crucial part of investment analysis worldwide. Sustainable investing has experienced remarkable growth in recent years. According to global reports, trillions of dollars are now managed under ESG principles, reflecting a significant shift in investor priorities. This surge is driven by increasing awareness of climate change, social justice movements, and the desire for long-term value. As more individuals and institutions recognize the importance of sustainability, the demand for ethical investment options continues to rise, reshaping the financial landscape. Several factors are fueling the rise of sustainable and ethical investing. Growing concerns about environmental degradation, social inequality, and corporate scandals have prompted investors to seek alternatives. Additionally, younger generations, such as millennials and Gen Z, are more likely to prioritize values in their investment decisions. Advances in technology and data analytics also make it easier to assess companies' ESG performance, empowering investors to make informed choices. Climate change is a major catalyst for sustainable investing. As the effects of global warming become more evident, investors are increasingly aware of the risks associated with unsustainable business practices. Companies that fail to address environmental issues may face regulatory penalties, reputational damage, and financial losses. Conversely, those that embrace sustainability can benefit from new opportunities such as renewable energy and green technologies, positioning themselves for future growth. Social justice movements have also played a significant role in shaping ethical investing. Issues like diversity, equity, and inclusion are now central to many investment strategies. Investors are demanding that companies address workplace discrimination, support fair labor practices, and contribute positively to their communities. By prioritizing social responsibility, ethical investing aims to create a more just and equitable society while delivering financial return. Governance is a cornerstone of sustainable investing. Investors are increasingly scrutinizing how companies are managed, including board diversity, executive compensation, and ethical decision-making. Strong governance reduces the risk of scandals and mismanagement, fostering trust and long-term stability. By holding companies accountable, investors can drive improvements that benefit both shareholders and society at large. There are various ways to invest sustainably. Some investors choose mutual funds or exchange-traded funds (ETFs) that focus on ESG criteria. Others may invest directly in companies with strong sustainability records or support green bonds that finance environmental projects. Impact investing, which targets specific social or environmental outcomes, is another popular approach. Each option allows investors to tailor their portfolios to their values and goals. Green bonds are a unique financial instrument designed to fund projects with environmental benefits. These bonds raise capital for initiatives like renewable energy, clean transportation, and sustainable agriculture. Investors in green bonds can support the transition to a low-carbon economy while earning returns. The growing popularity of green bonds reflects the increasing demand for investments that address climate change and promote sustainability. Impact investing goes beyond avoiding harm. It actively seeks to generate positive social or environmental outcomes. For example, investors might fund companies developing clean water solutions, affordable housing, or healthcare innovations. These investments aim to address pressing global challenges while delivering financial returns. Impact investing demonstrates that profit and purpose can go hand in hand, inspiring more people to consider the broader effects of their investment choices. One common strategy in sustainable investing is screening, where investors exclude companies or industries that conflict with their values. For instance, some funds avoid fossil fuels, tobacco, or weapons manufacturers. This approach allows investors to align their portfolios with their ethical beliefs, sending a clear message to the market about what matters most to them. Positive screening is the opposite approach, where investors actively seek out companies with strong ESG performance. This might include businesses leading in renewable energy, gender equality, or community development. By rewarding responsible companies, positive screening encourages others to improve their practices, creating a ripple effect throughout the market. Shareholder advocacy is another powerful tool in sustainable investing. Investors use their ownership stakes to influence corporate behavior, often by voting on resolutions or engaging in dialogue with management. This approach can drive meaningful changes, such as improved environmental policies or greater transparency. Shareholder advocacy demonstrates that investors have a voice and can shape the future of business. Data and ratings play a crucial role in sustainable investing. Specialized agencies evaluate companies' ESG performance, providing scores that help investors compare options. These ratings consider factors like carbon emissions, labor practices, and board diversity. Reliable data empowers investors to make informed decisions and hold companies accountable for their actions. Despite its benefits, measuring ESG performance can be challenging. Different agencies use varying criteria, and some companies may lack transparency in their reporting. This inconsistency makes it difficult for investors to compare options accurately. However, ongoing efforts to standardize ESG metrics are helping to improve reliability and build trust in sustainable investing. Common question is whether sustainable investments perform as well as traditional ones. Research indicates that ESG-focused portfolios can match or even outperform conventional investments over time. Companies with strong ESG practices are often more resilient, innovative, and better at managing risks. This evidence challenges the myth that investors must sacrifice returns for their value. Renewable energy is a prime example of sustainable investing in action. Investments in solar, wind, and other clean technologies have surged, driven by both environmental concerns and economic opportunity. Companies leading in renewables often benefit from government incentives, growing demand, and technological innovation. This sector illustrates how sustainability and profitability can go hand in hand. Social impact funds focus on investments that address social challenges, such as education, healthcare, and affordable housing. These funds aim to generate measurable positive outcomes alongside financial returns. By targeting specific issues, social impact funds demonstrate the power of capital to drive meaningful change in communities around the world. Companies stand out for their exceptional governance practices. These businesses prioritize transparency, ethical leadership, and stakeholder engagement. Strong governance not only reduces the risk of scandals, but also fosters innovation and long-term growth. Investors increasingly reward companies that demonstrate accountability and integrity at every level. Technology is transforming sustainable investing by providing better data, analytics, and transparency. Digital platforms make it easier for investors to access ESG information and track the impact of their investments. Artificial intelligence and machine learning are also helping to identify trends and opportunities, making sustainable investing more accessible and effective than ever before. Governments and regulators are increasingly supporting sustainable investing through new policies and standards. These measures encourage companies to disclose ESG information and adopt responsible practices. Regulatory support helps level the playing field, ensuring that all market participants have access to reliable data and can make informed decisions. Sustainable and ethical investing is a global phenomenon. From Europe to Asia and the Americas, investors are embracing ESG principles. International organizations and coalitions are working to harmonize standards and promote best practices. This worldwide movement reflects a shared commitment to building a more sustainable and equitable future. Large institutional investors, such as pension funds and endowments, are at the forefront of the sustainable investing movement. Their significant resources and influence enable them to drive change across industries. By integrating ESG criteria into their investment processes, these institutions set an example for others and help accelerate the shift toward responsible finance. Retail investors are also playing a growing role in sustainable investing. With more accessible investment options and better information, individuals can now align their portfolios with their values. Online platforms and robo-advisors make it easier than ever for everyday investors to participate in the movement and contribute to positive change. Younger generations are driving demand for sustainable and ethical investments. Millennials and Gen Z are more likely to consider environmental and social factors when making financial decisions. Their preferences are shaping the future of investing, prompting companies and fund managers to prioritize ESG considerations and develop innovative products. Corporations are responding to investor demand by adopting more sustainable and ethical practices. Many companies now publish annual sustainability reports, set ambitious environmental targets, and engage with stakeholders on social issues. This shift reflects a growing recognition that responsible business is not only good for society, but also essential for long-term success. Transparency is a key principle in sustainable investing. Investors increasingly expect companies to disclose detailed information about their ESG practices and performance. Enhanced reporting helps build trust, enables better decision-making, and holds companies accountable for their impact on society and the environment. As sustainable investing grows, so does the risk of greenwashing when companies exaggerate or misrepresent their ESG efforts. Investors must be vigilant, relying on credible data and independent ratings to separate genuine sustainability from marketing spin. Addressing greenwashing is essential to maintaining the integrity and effectiveness of ethical investing. Financial advisors play a crucial role in guiding clients towards sustainable and ethical investments. By understanding clients' values and goals, advisors can recommend suitable ESG products and strategies. Their expertise helps bridge the gap between personal beliefs and financial objectives, making sustainable investing more accessible to everyone. Education is vital for the continued growth of sustainable investing. Investors need to understand ESG concepts, available products, and the impact of their choices. Financial institutions, nonprofits, and governments are working to raise awareness through campaigns, workshops, and online resources. Informed investors are better equipped to drive positive change. Despite its growth, sustainable investing faces several barriers. These include limited product availability, inconsistent data, and a lack of standardization. Some investors may also be skeptical about the financial performance of ESG investments. Overcoming these challenges requires collaboration among regulators, companies, and investors to create a more supportive ecosystem. The rise of sustainable investing presents exciting opportunities for innovation. New financial products, technologies, and business models are emerging to meet the demand for responsible investment options. From green fintech startups to ESG-focused funds, the industry is evolving rapidly, offering investors more ways to make a positive impact. Sustainable investing encourages a long-term perspective, focusing on enduring value rather than short-term gains. By considering the broader impact of their decisions, investors can support companies that are building a better future. This approach aligns financial success with positive social and environmental outcomes, benefiting everyone in the long run. Measuring the impact of sustainable investments is essential for accountability and improvement. Investors and fund managers use various tools and metrics to track progress toward environmental and social goals. Transparent reporting and third-party verification help ensure that investments are making a real difference, not just on paper but in the world. Collective action amplifies the impact of sustainable investing. When individuals, institutions, and governments work together, they can drive systemic change across industries and markets. Collaborative initiatives, such as climate alliances and responsible investment networks, demonstrate the power of unity in building a more sustainable future. Emerging markets present unique opportunities and challenges for sustainable investing. Rapid economic growth, urbanization, and resource needs create both risks and rewards. Investors can support sustainable development by funding projects that address local environmental and social issues, contributing to global progress while seeking attractive returns. Future of ethical investing looks bright, with continued growth and innovation on the horizon. As more investors demand responsible options, companies and financial institutions will need to adapt. Advances in technology, regulation, and education will further empower investors to make choices that reflect their values and shape a better world. If you're interested in sustainable and ethical investing, start by defining your values and goals. Research available investment options such as ESG funds, green bonds, or impact investments. Consider working with a financial advisor who understands sustainable finance. Remember, every investment decision is an opportunity to support positive change and build a better future. There are many resources available to help investors learn about sustainable and ethical investing. Look for reputable websites, educational materials, and industry reports. Organizations like the UN Principles for Responsible Investment and the Global Reporting Initiative offer valuable guidance. Staying informed will help you make confident, impactful investment choices. Several myths surround sustainable investing, such as the belief that it sacrifices returns or is only for wealthy investors. In reality, research shows that ESG investments can be competitive and there are options for all types of investors. By debunking these myths, we can encourage more people to participate in the movement and drive meaningful change. Policymakers play a vital role in shaping the future of sustainable investing. By enacting supportive regulations and incentives, governments can encourage responsible business practices and investment flows. Collaboration between the public and private sectors is essential for scaling up sustainable finance and achieving global sustainability goals. Sustainable and ethical investing is not just a trend, it's a movement that will shape the future for generations to come. By making conscious investment choices today, we can help build a world that is more resilient, equitable, and prosperous. The next generation of investors will inherit both the challenges and the opportunities we create, making our decisions more important than ever. Conclusion: the rise of sustainable and ethical investing marks a profound shift in how we think about finance. By integrating environmental, social, and governance factors, investors can achieve financial success while supporting positive change. Whether you're an individual or an institution, your investment choices have the power to shape a better world. Thank you for joining us on this journey toward a more sustainable future.